My name's Mike Sullivan. I'm a former IRS agent and teaching instructor with the IRS. Welcome to my YouTube channel. They're short, they're sweet, and to the point. They last approximately 3 minutes. Today, I want to talk to you about how does IRS know you're cheating on them. I'm just going to give you some tips, being a former IRS agent, how they catch tax cheats the most. IRS has a series of algorithms that they run every different way on taxpayers. And first of all, they're going to know what the average income is actually in the zip code that you live in. They will know if you live northeast, northwest, southeast, southwest, what the average income is there. They're going to know information by your social security number. They are going to know in the last 6 years how much money you've made or people reported on you. They're going to have your W-2s and they're going to have your 1099. So they're going to have a really good idea what's going on. If you file a tax return, they're going to examine that tax return, and IRS has a series of algorithms that they know whether that tax return is low-hanging fruit to them or is not low-hanging fruit. So what I mean by that is if you're going ahead and you're filing a tax return that maybe all ends in zeros, or a tax return that is from a certain zip code that you're only making 15,000 and the average income in that area is 80,000, IRS is going to know, and that's probably going to flag that. But the really big story really behind on this, if you're filing a tax return, is going to be your DIF score. That DIF score stands for the discriminatory index function. Every single tax return that's audited goes through what's called a DIF process, a discriminatory index function number. That is where the computer scan that tax return, and they will let you know in every single block that you put a figure in how far away you are from the national average. So let's say you make 50,000 and IRS scans the rest of your returns. They scan dependents, exemptions, credits, business income, business losses. IRS will know by the algorithms how far away you are from the standards. And if there are so many flags raised, IRS will usually know you're cheating. If IRS knows you're taking too many credits on your return, they're going to know that because they keep a very close track of credits. So it's the algorithms, the DIF score, the credits. Is your tax return been consistent based on your W-2s and 1099s? So IRS actually uses the computer algorithms kind of determine that. Nobody looks at your tax return when they're filed. The computer actually, through every algorithm, kind of knows where you are. If IRS has slated you for an audit, there's a really good chance they're going to catch you or nail you on something. It really doesn't pay to cheat. You may think it does, but at the end of the day, when IRS catches up on you and assesses penalties and interest, it's just not going to go really well for you. So just keep that in mind. Every year, the IRS is more sophisticated in their algorithms. They put a lot of money into research and development to try to close the tax gap. So if you're cheating on your taxes or you're taking one or too many deductions, at some point in time, the better IRS's algorithms get, the closer you are going to get to a 3-year audit. Thank you. By the way, if you have questions or comments, either like or leave a comment. I'd like to give you more information. If you have a subject I want to cover, I'd really like to kind of let you know more what the IRS thinks and kind of open the door and show you inside the IRS room. Thank you.